I feel like the bad guy sometimes, right? I've got a client, and I'm just like the no guy, right? So clients originally wanted to get a home with zero down because the boyfriend is a veteran. He's a veteran, so he can take advantage of a VA loan. He can do zero down. Unfortunately, his business situation and his newly acquired self-employed income doesn't have a long enough track record to qualify for a home loan. So we can only do the loan in his girlfriend's name. Well, if we only do the loan in his girlfriend's name, she is not a veteran. You can only do a VA loan with married spouses if you're going to use joint income. We can only do the loan in her name with her income. Therefore, they've got to put 5% down, right? Luckily, she makes great money. They can still qualify for a condo in the LA area around 500,000 or so. So they're out there looking. But because they're frustrated with the rates, they're frustrated that they have to put money down instead of using the zero down VA option. They're frustrated at where the payments are because of the fact that rates are rising. Once a week, I get an email or a phone call from them. Hey, can I use the California Dream Down Payment Assist program? No, unfortunately, that ran out of money 3 weeks after it was launched. Okay, hey, can I use this other grant program? No, unfortunately, there's income limits on that. If you make more than $72,000 a year, you don't qualify. Okay, hey, can I do this widget over here combined with this thing over here to put this puzzle piece together to get this free $20,000 in community funding? No, unfortunately, to get that, you have to have this income level, and you can only buy in these housing tracts, which are low to moderate income housing tracts in neighborhoods you're not interested in. So it's like, I just feel like the bad guy as the lender, right? This is the reality of like the emotional damage that's happening to lenders, is that as clients are trying to think outside of the box and they're doing their Google searches and they're going to these websites to look up interest rates that are just advertising scenarios that don't exist, right? Like if you ever read the fine print on one of these mortgage online rate quotes, it's like must put 40% down, must be in Maricopa County, Arizona, must not be self-employed, must pay 2 points. But it's like nobody in my world. I normally service Los Angeles, Las Vegas, and Austin, Texas. Nobody in my world actually qualifies for the rate that's being advertised, because either they're not putting 30% down, or they don't want to pay points, or they're not in the particular county that's priced better, or they are self-employed, or their credit score is not over 800. It's like, there's just always some disqualifying factor. So I kind of have to be the bad guy and give the bad news, which is why it's even more important than ever that us loan officers and realtors work together. We're strategizing. We're having pipeline calls. We're having conversations about what's going on with the client and their finances and what they're thinking and where they're getting frustrated. I can tell you, I've had several realtors save deals for me because they're like, hey, this client's really frustrated that you haven't got back to them on this down payment assist program. I'm like, oh no, I got back to them. It just wasn't the answer that they wanted to hear. They're not eligible for that down payment assist program. Let me give them a call and like walk them through that again, right? Conversely, I've saved a lot of deals for realtors by calling the realtor and being like, hey man, the client's getting really frustrated. They don't understand the dynamics of, yes, we're on our second, third, fourth offer. There's just so few properties available on the market that it's going to take multiple offers before they get one accepted, because everybody and their brother is bidding on the same 3 available great homes in the neighborhood, right? There's lack of inventory because so much of the inventory is locked up at interest rates under 4%. And those people will never sell, right? I have a property that I should sell. It's about a $650,000 4-bedroom, 3-bath kind of starter home. I should have sold that when I moved to my new house. But the reality is we have a 3% interest rate on that. It made more sense to rent it out than sell it. Like we're never going to sell that house, right? That's one unit of housing that's not coming back to the market for these first-time buyers. Now replicate that hundreds of thousands and millions of times across the market. We just have limited inventory. This is the conversation that I'm able to have with the client, or I can tip off the realtor to have with the client so that you don't lose momentum and you don't lose the client. So this is kind of how we have to deal with the fragile emotional state of buyers, right?